Hey everyone, welcome back to Corporate Decoder, where we decode the confusing world of business jargon. And today it looks like WideOpenWest is trying to tell us something big is happening, or maybe they're just trying to be quiet about it. You tell me, are they hiding something or just sharing a little news? Alright, so WideOpenWest, or WOW as they're probably better known, dropped some news on August 11th. They're talking about their results for the period that ended June 30th, which is basically the second quarter of their year. Now they've included the press release with this report, which is pretty standard. Think of this like the company's official announcement about how they did financially during those 3 months. Now, WOW is a pretty recognizable name in the internet and cable TV world, especially if you're in some of the areas they serve. They've been around for a while trying to compete with the really big players. They offer internet, cable TV, and phone services. Basically, they're in a super competitive industry where you're constantly fighting for customers. And speaking of competition and customers, let's get to the meat of it, the financial results. This report is essentially a check-in on how WOW is doing with its money. They filed this report because they're a public company traded on the New York Stock Exchange, so they have to let investors know what's going on. This press release is the key here. It's where they're sharing their financial story for the second quarter. Now, it's important to remember what they say about this information. They're saying it's furnished, which means it's like sharing a picture, but it's not officially filed as part of their historical records in the same way. It's a subtle but important legal distinction. It means they're telling us what's in the press release, but they're not necessarily putting the full weight of a filed document behind the numbers themselves. It's a bit like saying, here's what we told everyone else, and we're telling you too, but don't count this as our most formal record yet. This section, results of operations and financial condition, is always the most interesting part of these reports for us. It's where companies tell you how they're actually performing. Are they making more money? Are they losing customers? Is their debt going up or down? This is where we get those clues. For WideOpenWest, the main event here is everything inside that press release they attached. That press release is going to have the juicy details about their second quarter performance. And signing off on this is John Rago, the Chief Financial Officer. When the CFO puts their name on a report like this, it means they're putting their stamp of approval on the information being presented. They're the top financial person, so their signature tells you they believe the numbers and the statements made are accurate to the best of their knowledge. So let's dive into what those numbers might be showing us for WideOpenWest in the second quarter. Companies like WOW have to constantly manage a delicate balance. They need to invest in their network to provide faster internet and better service, but they also need to make sure they're profitable. They compete with giants like Xfinity and AT&T. So they're always trying to grab market share, and that often means spending a lot on marketing and customer acquisition. If WOW is seeing growth in its internet subscriber numbers, that would be a really positive sign. Internet is usually the more growth-oriented part of their business compared to traditional cable TV, which is often seen as a declining service. So if they can show more people signing up for their internet, especially faster and higher tier plans, that's a big win. On the flip side, if we see a drop in their overall video cable TV subscribers, that's not entirely surprising given the industry trend towards streaming. What would be more concerning is if their internet subscriber numbers are also weakening significantly, or if they're losing more customers than they're gaining each quarter. This is a constant battle for them. Another key area to watch is their revenue per user. Are customers paying more for their services, either by upgrading plans or adding new ones? Even if the total number of subscribers stays relatively flat, increasing the amount each customer spends can be a good way to boost overall revenue and profitability. Now, we're not seeing specific numbers in this particular filing snippet, as it's just the cover and the items listed. The real financial tables and figures would be within that Exhibit 99 Bulb 1 press release. However, knowing the context for a company like WOW, we'd be looking for trends in subscriber growth, average revenue per user, capital expenditures, that's money spent on building and improving their network, and of course, profitability metrics like EBITDA, which is earnings before interest, taxes, depreciation, and amortization. In the fast-paced world of telecommunications, a company like WideOpenWest has to be incredibly agile. They are constantly dealing with technology upgrades, which means significant investments in infrastructure, things like fiber optic cables, new equipment for delivering faster speeds, and improving their Wi-Fi capabilities in customers' homes. These investments are crucial to stay competitive, but they also put a strain on finances. From a strategic standpoint, WOW's success often hinges on its ability to offer competitive pricing and superior customer service in the local markets where it operates. When we look at their financials, we're trying to see if their strategy is working. Is the money they are spending on expanding their network and marketing translating into tangible growth in customers and revenue? Or are they stuck in a cycle of high spending with little to show for it on the bottom line? It's also important to consider the broader economic environment. High inflation, interest rate changes, and consumer spending habits can all impact a company like WOW. If people becoming more of a necessity, so that segment might be more resilient. One of the biggest challenges these companies face is churn, which is the rate at which customers stop doing business with them. High churn means you're constantly having to replace lost customers, which is expensive. Keeping customers happy and loyal, ideally for many years, is key to long-term success. So if we saw anything in that press release about customer retention or a decrease in churn, that would be a very positive signal. Let's think about how an investor might view WOW. They'd be asking if WOW is a growth company or a value company or neither. If they're consistently growing their subscriber base and increasing their revenue, they might be considered a growth company. But if their growth is slow or stagnant and they're perhaps offering a decent dividend or trading at a low valuation, they might be considered more of a value play. However, in the competitive telecom space, pure value can sometimes mean slow decline. The filing also lists common stock as being traded on the New York Stock Exchange under the symbol WOW. This means that the performance of the company directly impacts the stock price, and investors are always watching these reports closely for any signs of trouble or opportunity. In conclusion, this filing is a routine update, but the details within the press release will tell the real story. WideOpenWest operates in a demanding sector, and its financial health depends heavily on its ability to attract and retain internet customers, manage its costs effectively, and continue investing in its network to stay ahead of, or at least keep pace with its larger competitors. We'll be looking for signs of subscriber growth, increasing revenue per user, and controlled expenses to gauge their performance. Alright, that's our initial look at this filing from WideOpenWest. What's your take on the competitive landscape for internet providers like WOW? And what do you think they need to do to truly stand out? Drop your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe for more of these deep dives into corporate finance. And don't forget to join our Discord community. It's linked in the description, and it's a great place to discuss these things further. Thanks for watching, and we'll see you in the next Decode.